the aviation industry. And so much attention gets paid to people that burn jet fuel, turboprops and jet operators. And a lot of people overlook the piston aircraft community. And a quick background on myself, if you don't know much about me, is lifelong aviation enthusiast, got the aviation merit badge. That was my exposure to aviation when I was 12 and fell in love with it. Got a job at the local airport when I was 16, putting gas in airplanes, cleaning airplanes, and started taking my paycheck that I got for being a line attendant, took it down the hall to the flight school, endorsed the back of it, and traded it out for flight time. So love flying airplanes. Our family has a 1947 J3 Cub, and we also have an old detailed Bonanza. And I'm also a licensed flight instructor and keep that current. So love aviation. On the weekends, that's where you're going to find me is hanging around the airport, flying airplanes and giving airplane rides. So with that aviation background and now being in the aviation insurance industry for almost 25 years, I really enjoy educating folks. So that's what the purpose of today's webinar is. It's non-solicitatory in nature. It's just to help you better understand the aviation insurance industry and the current status of. So with that, I'll go ahead and go to my next slide here. And this is our agenda. These are the things that we're gonna talk about today. It was in the virtual brochure, if you will, that Tom sent out and that was posted on LinkedIn and some other social media. But these are the 5 things that we're gonna discuss. And number 6 is the question and answer. But as Tom said, if you have something and you're afraid it's going to go in one side of your head, not the other, go ahead and put it in the chat or interrupt me. And if it's something that I'm going to cover later on, I will let you know that you're stealing my thunder, and we're going to cover it a little bit later. So first, piston aircraft insurance difference. How is this different than turbine aircraft? Well, if you operate a Gulfstream, for example, and it's professionally flown, you could get easily $500 million of liability coverage. We actually can do easily 750 million, but 500 million is really easy to get. That's a lot of millions of dollars of coverage. When you look at the piston industry, typically all we are able to secure is $1 million to $2 million. That's the typical range. And to be quite honest with you, if I had to take a poll, a scientific poll, I would bet that 95% of the people out there that are owner pilots in single engine piston aircraft have $1 million of liability coverage that is sub-limited to $100,000 of liability per passenger. And what's interesting about this is how long that has kind of been the benchmark. In our old Bonanza, we have some of the logbooks. Well, we have all the logbooks. But some of the documents that were in the old briefcase from the 1970s was actually an insurance policy in there from 1978. That was before I was born. And the liability limits that they carried was $1 million, sub-limited to $100,000 per passenger. So it's just fascinating to me that that's been the benchmark for so many decades, and it really hasn't changed. But you are able to get higher liability limits, and we call that smooth limit is the slang that we use in the insurance industry, where you can get $1 million with no passenger sublimits, but you could also get something in between. You could get a $200,000 sublimit or a $250,000 sublimit. So you can get creative. And when you do get to $1 million smooth or $1 million with no sublimits or $2 million with no sublimits, that's when you can start getting excess liability coverage too through an aviation insurance market. So depending on your risk profile, you could get $2, $3, $5 million of coverage, and in some instances higher than that. But again, that's your typical limits. Underwriters are used to the owners flying the aircraft. So when we talk to underwriters, and quite honestly, a lot of it for single engine piston aircraft specifically has been automated over the last 10 to 15 years. But occasionally we do get to talk to a human, and those humans are typically pilots. They have a passion for aviation just like you, and they are underwriters. And we will talk about the flying they've been doing, the flying we've been doing. We talk about our clients. And in some instances, it even makes sense to have the client talk to the owner directly. Sometimes it's over the phone, or a lot of times it's at the different events around the country. Oshkosh, Sun and Fun, things like that. So again, underwriters typically understand what it is you're doing, but they do have a box in what they can do in terms of offering limits, offering even coverage for that matter, and pricing. So they do have a box that they have to operate within. So factors affecting the premium that we all pay. The age of the pilot is a big one. As we come into a soft market, meaning better options for coverages and lower pricing, which is what we're starting to see a little bit, just simply from a supply and demand issue. But the age of the pilot is still there. So, I joke about love the one you're with. Once you get into your mid 60s, you need to start thinking strategically about how long you want to fly and what you want to fly. Because you may be with a market that is only going to insure you till you hit 67, 70, whatever their magic number is, and every carrier has a different one. So you want to make sure that you are thinking strategically about what type of aircraft you want to fly and how long you want to fly for, and then find the right carrier that's going to be a long-time partner for you for that. And quite honestly, as I stated earlier, supply and demand, more markets coming into creating more capacity. How long will those markets be here for? They may only be around for 1, 2, 3 years. I remember about 15 years ago, there was a big brand insurance carrier, and everybody would recognize their logo if I put it up here. They were literally in the insurance industry for aviation for 18 months. They got in, they wrote a lot of things, at a cheap price, and got out within 18 months. So you just want to make sure you're partnering with the right carrier.
Kyle,
Yes.
you have a question in chat from Vijay that says, what about twin Cessnas? Will they become more of an issue in mid 60s?
Yeah, that's a good question. Again, and Jay, that's gonna depend on where you're at, what state you're in, because not all carriers operate in all states. So, for example, California can sometimes be problematic because not all of our underwriters are able to write business in California. But as long as the parts availability is there, you're still going to see a lot of underwriters that want to write twin Cessnas. I know it's not a Cessna, it's a Piper product, but for example, we had an older Navajo the other day, and one of the new markets, they were able to write that Navajo at a competitive price. So I still and like my Bonanza, for example, we had an issue with the rudder vaders, and the fact that we didn't have a solution if your rudder vaders were damaged was destroying the ability to get affordable insurance for the Bonanza community. So, it's not just the age of the aircraft, but it's also going to be parts availability. And then think about for some of the newer aircraft, the manufacturers that are overseas that are manufacturing aircraft and shipping them over here. We have to have a conversations a lot of times with the underwriters about new aircraft. And their question is, well, what about parts availability? Because if the aircraft is damaged, how expensive is it going to be for the underwriter to repair it? So
Yeah. So, Carl, I think the question I had was more regarding the age. I
Mhm.
had some people have been articulating that these aircraft might become uninsurable once you become mid 60s. Is that accurate?
No, I wouldn't. For some markets, the answer is going to be yes. I'll give you an example. We had one insurance carrier that this was their bread and butter. I mean, they were insuring twin Cessnas all day long, even for charter operations that were manufactured in the 60s and 70s. This carrier has been around since the early 90s. They were sold, rebranded, and now if it's older than 1992, they aren't interested. But two of the senior underwriters that were there and left and started another aviation insurance carrier a couple of years ago, now they're writing them. So um, I think that there's a lot of I know there's a lot of variables that go into it. And to your point on the age of the aircraft, I have no idea what the underwriters are going to start asking, but they're probably going to get more into the weeds around how the aircraft is maintained. Are there corrosion issues? Is money being spent on it with new avionics and new engines and things of that nature?
Sorry, Cal. My question was on the age of the pilots, not on the aircraft. So,
Oh, the age of the pilot? Yeah. Same situation. Again, you're going to have to partner with a carrier, find the right carrier that's going to want to be with you until you reach a certain, like, for example, I had a gentleman hits real close to home because he became a good friend of mine, went from the King Air 90s to the 200s to the 350s, and he was able to fly single pilot all the way until he was 75 years old with a $20 million limit. If you were just to take that piece of paper and go out to all the insurance carriers, none of them would pick that up. but from a relationship standpoint, we had some underwriters that knew of that person and were able to keep him flying all the way up to age 75. So at a certain point, it becomes about the relationship.
Thank you.
So flight time, licenses, ratings, class of flight physical, for example, basic med. Some of the underwriters out there said, nope, we want a third class medical. We understand what the FAA is saying, but this is what we want. We still want a third class flight physical. Or as you get into maybe your 70s, maybe an underwriter to say, hey, look, if they can get a first class physical, I'll keep them. But if they can't get a first class physical, I don't want this risk. So the physical, class physical that you have could impact it. From a licenses and rating standpoint, we have some very ambitious clients out there that just want to be better pilots. They're always saying, what's going to make me a better pilot? Someone will go get a seaplane rating. Some will go get a glider rating. Personally, I think doing some glider flying, I think that makes you a much better pilot flying single engine aircraft, especially if that engine quits from an energy management situation. But that's just my personal experience. So those things help. How do we put a monetary value on it to the underwriter? It's difficult to do. It's very subjective, but again, it helps. Age of the aircraft, I think we hit on that quite a bit. The complexity of, somebody have a question?
We do have a question, sorry.
Go ahead.
So how is basic med viewed by insurance underwriters? Is this a red flag? What can we do to fly under basic med and keep the insurance company happy?
Yeah. So again, there's so many different insurance carriers out there, maybe a dozen plus right now. And I don't have the answer for every single one of them. But there are some that will accept basic med and there's some that won't. And there's some that will accept basic med until you get to a certain age. That would be a 30-minute conversation with a PowerPoint just on that, talking about what each carrier allows. Happy to have that conversation later. Or if you do have a relationship with your broker, maybe they could give you a list of what they've documented from that. So sorry, I can't get into that detail with basic right now, but it's a conversation that needs to be had. Complexity of aircraft. I had one underwriter say, look, Kyle, we'll keep renewing this guy, but we are not interested in this A36 Bonanza anymore. He's got 6 seats and he's now 80 years old. We'll insure him at a 4-seat Cessna 182, but not a retractable 6-seat aircraft. So complexity of aircraft will also matter about the pricing and how long you can get insurance for. And then I mentioned earlier, location of the named insured or aircraft base. Not all carriers can write in all states. So even if you put on your application that you are, say, in the state of Utah, and you say that the aircraft is based at an airport in Utah, and you have a DSB on your transponder, and you're going back and forth to California all the time, that insurance company may say, nope, looks like to me you're in California all the time. I don't know where you came up with this Utah address. We can't write you. So again, every carrier is different with where they can write insurance company coverage for, because it's regulated by the state. Insurance is not regulated federally. It's regulated by each state. There's 50 different sets of rules these underwriters have to adhere to. And again, market appetite capacity, we've had some capacity come in. So spent longer on the slide than I anticipated, but excellent questions and thank you for them. So I'm going to go on the next one. How much to insure the aircraft for? So this is very, very important. And the value of it may go down or up every year. I've seen an aircraft get purchased before a recession and the value of it's really high. So we insure it for really high, and then a recession happens, we lower the value, and then the recession's over, demand comes back for that type of aircraft, and now we're increasing the value again. Well, why is that important? Well, aircraft insurance is typically different than car insurance. So if you have full coverage for your car, for example, and the car is wrecked and the insurance company is going to look at it and they're going to say, well, this is what we think the car is worth, and that's what they're going to pay you. Well, with an airplane policy, it's totally different. If you look at your declarations page, or you fill out your application and put the value on there, and then the corresponding policy is issued correctly, You are agreeing to what you think the aircraft is worth, and the insurance company is accepting that, and they are agreeing to that value. So if the hangar falls on it and turns it into a pancake, they're going to write you a check for the agreed value. It's on the declarations page, less any deductible that may be applicable. That's what they're going to give you. Well, why do you want to make sure it's insured correctly? Well, if you're over-insuring the aircraft and it's damaged, the insurance company is going to look at it, the damage. They're going to look at how much it costs to repair it, and they're going to look at what they could get from a salvage value standpoint, and they're going to say, "Ooh, wow, yeah, we're better off paying to fix this aircraft than we are to total it." And then you're going to say, "Wait a minute, this airplane is really messed up. It's going to fly crooked. I don't want a crooked flying airplane. No way, no way. We're not repairing this." And the insurance company says, "No, we are going to repair it." The opposite is true if you underinsure the aircraft. If you underinsure the aircraft, the insurance company is going to look at the salvage value. They're going to look at what's going to cost to repair it. They're going to add those two up. And they're going to say, "Oh, wow. Yeah, this far exceeds the insured value. We're much better off to write them a check for, say, $30,000 for this Cherokee, because we're going to go out and sell that salvage, and we think we can get $25,000 for it. Whereas it was going to cost $15,000 to fix it." So the insurance company then would only be out of pocket for $5,000. So under the simple math, you could see why the insurance company is going to want to total your airplane, because you were underinsuring it. Now, sometimes the insurance company, if they'll be able to sell you back, you'll be able to negotiate a deal where you can buy back that salvage and fix it yourself. But again, the insurance company has the right, for the policy language, to put that salvage out for bid to see what they come up with. So that's why you don't want to over-insure your aircraft or under-insure your aircraft. Went through that kind of fast. Do we have any questions from the group on under-insuring or over-insuring? Okay. Here's another thing to think about too. If you're buying a project.
Yeah, sorry.
Yeah.
A lot of value on these aircraft is in the engines. So as you kind of use them up, obviously they kind of go down. So you're saying every year you need to adjust your insurance value based on your utilization?
Possibly. And for a good example of that would be like the R-44, the Robinson helicopter, for example, right? You know, those things turn into a pumpkin after they have, what, 2,000 hours of flight time on them. So really the value of them goes down every year. So in that extreme situation, the answer is yes.
Okay. Thanks.
Another example is a friend of mine is looking at buying a twin Comanche, for example. And the twin Comanche is looking at, it needs new avionics. It's old avionics. The engines are well past TBO. And so he thinks he's getting a fair deal on this, but the reality of it is he's going to be sinking a lot of money into it over the next 12 months. So in that situation, you want to make sure that you are progressively insuring, increasing the value, the insured value for the aircraft. And you may want to look into a policy that has some language in there that says basically, as long as you are able to show and catch up with the premium, the additional premium that's due, that the investment you're making in the aircraft is increasing the value every, say, month, the policy will respond to that. But you do not want to rely on your aircraft if you're having a third party to the maintenance. You do not want to rely on your aircraft sitting in that maintenance technician's hangar saying, "Oh, they've got insurance." Well, they have insurance for their negligence. They don't have insurance for your negligence. And also, if it's an act of God, say a tornado or something along those lines comes in and destroys the aircraft, there may not be the kind of coverage that you think that's there for you. So if your airplane is grounded in your maintenance technician's hangar, I highly encourage you to maintain your insurance policy. All right, we'll go on to the next slide unless there's any other questions about how much to insure it for. Oh, well, I'll put out one last thing, and I experienced this firsthand. So on our old Bonanza, we had a new panel put in, and the insurance company looked at their data, Blue Book, whatever the source they were using, and said, "We can't insure the airplane for this. It way exceeds our book value on it." So what we did is we sent pictures and we sent an itemized list of everything. And then we also said, if we were to go out and replace it with another J model Bonanza, and then we were to put that avionics equipment in this to make it like what we have, here's where we would be at. And that dramatically helped how much we were able to insure the aircraft for. Do I have enough liability coverage? So we opened up the slide about the presentation about turbine aircraft versus piston aircraft and how much coverage you can get. And I will put this out there for everybody to contemplate. The cost of legal defense is outside of the limit. What does that mean? That means that the insurance company has a duty and an obligation to defend you. So if you get sued for causing bodily injury or property damage, which triggers the policy from an occurrence standpoint, you've had an occurrence, now the insurance company has an obligation to defend you. They're going to pay your lawyer bills. But here's another kicker. Once your policy limit is exhausted, they no longer have a duty to defend you. So if you really mess up and you only have $100,000 of per passenger coverage, for example, they're going to say, wow, we're not going to spend $100,000 in legal bills to defend them when we think we're probably going to end up writing a check for $100,000 anyway. Because if we did, then we'd spend $200,000. Let's just write that check for $100,000 for that person that our client injured, and now we no longer have a duty to defend them. That's the case example of why you want to contemplate maybe carrying higher liability coverage. I'll give you an extreme example. Say you had $10 million of liability coverage and you get sued, and the insurance company says, okay, let's look at the facts here. What do we got going on? They may even do mock trials to see if this were to go to court and get in front of a jury, what is the jury going to say? And if they think that they have a good chance of winning, they would spend $1 million, $2 million, $3 million in your legal defense to defend what I call the purse. The purse is how much liability coverage you have. If you have a $10 million limit, again, that's an extreme example, they're going to pay a lot of money in legal defense to defend you. So the more coverage you have, the more cool spends to defend you.
Yes, but I was told it's very difficult to get coverage beyond $1 million flat.
Yeah. And again, BJ, it depends on your situation. Everybody's a little bit different. The type of aircraft, what state you're in, are you Part 91? Are you Part 135? Is it a flight school? There's a lot of variables that go into it, and that may be the case. It may be a situation where you can only get $1 million. But I would also say this, in the light of the market in the last, I'd say 12 to 18 months, there's more capacity in there where you could get an excess limit. So if you get $1 million with no passenger sublimits, there's a good chance you can get at least $1 million excess to get you to a total of $2 million. Yeah. Your passengers are your biggest liability. So maybe you're like me and you love giving back to the aviation community, and you are a pilot for the Young Eagles program through EAA, or maybe you're an aviation merit badge counselor and you like giving kids rides to help them get the aviation merit badge. Just be aware that that is an exposure that you have. And fortunately, if you meet all the criteria through Boy Scouts or Scouting of America now, or the EAA, and you're giving those rides, there is some excess coverage that is out there that will protect you if you meet certain requirements. But maybe you don't want to rely 100% on that. So maybe you want to look at higher liability limits. Operating densely populated area. I mean, the MD-11 accident that made the news a couple of weeks ago, right? When you look at the debris field that's there, it's very extensive. Well, if you operate out of like where I'm at, Little Green Valley Airport, we're starting to get a little more houses around the airport, but there's a lot of options. If something bad happens, I can put it down on a road or a field very close by. But if you're taking off at a downtown Kansas City airport, for example, there's not too many options. So maybe you want to look at higher liability limits because of that. Another thing is personal umbrella policies. Some people will say, Kyle, I got an umbrella policy. Well, I'm going to say 99.9% confident, because maybe there's that 0.1% chance that I'm wrong. Personal umbrella policies exclude aviation. And if it doesn't, once you go to your personal umbrella carrier and say, hey, I just want to make sure this covers aviation, they're going to come back and say, well, it did, but now it doesn't, now that we know that you have aviation exposure. Who is covered versus who can fly your aircraft? This is very common at the local airports. Very
Sorry,
common.
for that trip. Is there anybody you know who, or you can help us get a umbrella which includes aviation?
Yeah, we can have that topic. We can discuss it offline and we'll
Okay, thank you.
consider some options for that. Yeah, good question. So who is covered and who versus who can fly aircraft? Again, I've seen it a lot of times out there at the local airport on Saturday. Oh, Billy, he's a real good stick. I'd let him fly my airplane. He can go fly my airplane. And next thing you know, Billy's up flying that pits around. And you're going, does Billy meet your open pilot warranty? Are you relying on him having non-owned coverage? Is he a named pilot? Does he, I mean, there's so many variables that go into it. So your policy is designed to cover you, not your buddies. So let's just say that Billy's going to fly that pits and Billy does meet the open pilot warranty. Odds are that policy says, all right, yeah, you can let somebody fly your aircraft and you're not charging them for it because that'd be commercial use and your policy doesn't cover you for commercial use. And that person does meet the open pilot warranty and they go up the side of the runway and tear it up, the policy covers you, but that insurance company could turn around and subrogate against your buddy. So now all of a sudden your buddy goes, well, I didn't have any non-owned coverage. I thought you had coverage. So now it's going to be a little awkward out there at the cookouts at your local airport when the insurance company that you have sues your buddy to get reimbursed for the damage that he did. So what should you do if you really want Billy to fly your pits? Well, you can name Billy to your policy as an additional insured and get Billy a waiver of subrogation. That's what happens when the insurance company goes back after your friend to seek reimbursement for the damages that they did. It's called subrogating. So if they waive the rights to subrogate, then they're not going to go back after Billy. Also, if Billy were to get sued because Billy went off the side of the runway and hit another aircraft or tore something up outside of the aircraft, the insurance company would pay to fix whatever damages was that Billy did if Billy gets sued. So meeting the pilot warranty is key to keeping coverage valid. I'll never forget years ago, probably 5, 6, 7 years ago now, I was sitting out in Denver and there's a beautiful airport out there with a restaurant overlooks the entire tarmac. And I was sitting there with the chief underwriting officer of a major aviation company. And we were looking at Cirruses out there. We were looking at some business jets. And I'll never forget, he says, Kyle, I think you'd be surprised at how many people out there are violating their open pilot, or not their open pilot warranty, their pilot warranty, and most of them don't realize what they're doing. They don't know that they're doing it. So that is the most common area where we see that coverage is invalidated is people not meeting the pilot warranty. And that could be, hey, I'm a named pilot, but what if you forgot to get your flight review? Or maybe if that policy requires specific training or an IPC every so often. Little things like that can burn you. Or, oops, I forgot that my medical certificate expired. Or I was required to keep a first class, but now it's deferred down to a second class type situation. So make sure you meet your pilot warranty. And going back to the non-owned coverage situation. So if you are going to let somebody fly your aircraft, it's very important again that they meet your pilot warranty so that you have coverage. But if you want to require them to have coverage so that they are covered should they be negligent in damaging your aircraft, might not be a bad idea. One of the flight schools that we insure, they had one of their students go off the side of the runway, damage the airplane, prop strike. The owner of the flight school called me up and said, Kyle, I'm so happy that you gave us the advice to make sure all of our students carry renter's coverage, non-owned coverage with some physical damage. It's so nice that I'm going to be able to turn this in and it's not going to go against my record. And I said, well, what happened? Oh, well, it turns out that our in-house maintenance folks, they didn't put the wheel on right. And so when they landed, she went off the side of the runway because the wheel fell off. And I said, Bobby, no, that's not how it works. This is only if they were negligent. If you were negligent, since you didn't put the wheel on right, their non-owned coverage is not going to cover them for this. It's going to be your policy. So any question about who's covered, who can fly your aircraft? All right, we'll head on to the next slide.
No, it's fine. It's still.
Okay.
on the trailer. It's
Uh,
made a
so-
small cloud.
I think
Already picked up
somebody,
the clouds and that she made so far.
not on
and
mute.
it's not on the trailer.
When I told Logan, say, thank you.
There, thank you. So avoiding, I thought I had coverage for that. I have been in a couple of those meetings where we're sitting there, I'm sitting with my client and somebody in their network sitting there and they said, well, we thought we had coverage for that. And it turns out that they didn't. So avoiding, I thought I had coverage for that. Again, number one reason for claim denial from my perspective is not meeting the pilot warranty, the training requirements, or the flight physical, something of that nature. Another one is annual inspection or other maintenance is not compliant. So if you look at your policy, odds are it's going to have some language in there about from a maintenance standpoint. So if the aircraft does run out of its annual inspection and you need to get it from point A to point B to have that maintenance done, make sure you contact your broker and make sure your broker reaches out to the underwriter and gets a waiver for that flight. It's not uncommon, but you got to check that box because sure as heck, you take off, that engine pukes on you, and now you're in a field with a torn up airplane. The insurance company is going to say, well, no coverage. It was out of annual inspection. But if you call them up, say, hey, I got a ferry flight permit, and odds are they'll give you that grace. Make sure you get that before you do that flight.
So the fact that you have a ferry permit from the FAA doesn't by itself insure you.
No, it's not a guarantee. Nope.
Okay.
Definitely. I'm not saying that that's 100% of the case is true, but just to make sure, I would definitely put it on file with the insurance company and get approval for it. Yep.
Thanks.
I remember years ago when I was flying, a guy said, hey, Kyle, I repossessed this airplane. Can you go get it? I said, well, can you tell me a little bit about it? And he says, oh, yeah, they said that the maintenance is up to speed on it. I'm going, well, if they couldn't afford to make the principal and interest payment, they probably weren't doing something on the maintenance. So I airlined out to Pennsylvania to get this aircraft and I pulled the logbooks out. Fortunately, the logbooks were in the aircraft like they said it was going to be. It wasn't as eventful as it looks on TV with some of those airplane repo shows. Looked at the logbooks, I'm like, this thing's been out of annual for 9 months, not even close. So I called the FSDO, got a ferry flight permit, and then found a local maintenance technician that was aware of the aircraft. And he looked it over a little bit, signed it off, called the insurance company. So here's what I got. They sent me an email saying I was good to fly the airplane. So definitely make sure you look at that.
What about,
Say
what
again?
about a ferry flight for an MEA issue? Do you still need a insurance cover permit for that?
Please repeat the question. I think I stepped on you.
No, if you're doing a ferry flight because of an MEA issue, do you still need a insurance?
because of the
clearance?
MEL issue?
Yes.
Well, no, because from an MEL standpoint, the FAA still recognizes that as an airworthy aircraft. I understand the confusion there with getting a ferry flight permit, but that's going to be a different situation, I would believe, from an MEL standpoint versus it's out of airworthiness instead of a ferry flight permit. Sean, do you have anything to add on that? Do you have any perspective on MELs versus ferry flight versus just out of annual inspection by chance?
Yeah, I would say the aircraft needs to be airworthy for the flight that's being intended. In other words, if you're, you don't have the, I don't know, something on your avionics is out of check or just inoperable. But you're just flying a VFR flight. I would say in many circumstances, and every company is going to be different in the wording of their policy. But I would say that the VFR flight would be fine, but it would probably be a different story if you're flying into an instrument, trying to fly instrument approaches with inoperable equipment.
Yeah, thank you for that perspective, Sean. So I would also say this, an MEL standpoint is different than getting a ferry flight approval. And also now we're talking about piston aircraft. Typically MELs is typically around turbine aircraft. But around the piston aircraft, a lot of the policies will specifically say annual inspection, and that's where it applies. But that's an excellent question. And I personally would not have issue with an MEL standpoint. I would have an issue and want to verify that if the aircraft is out of annual inspection.
Kyle, this is Tom. I have a point of order for you. You asked Sean a question, but the other people on this thing don't know who he is, so you might want to explain who he is and what he does and why you referred to him.
Well, have we seen that show Smarter Than a Fifth Grader? So I'm the fifth grader, and I have a phone. I got to phone a friend. So my friend is Sean Kelly, who has joined us, and Sean is an underwriter for a major aviation company that we have done a lot of business together with over the years. And so prior to joining the call, I asked him if it was okay for me to punt some questions from him time to time. Sean, is there anything else you'd like to add?
No, I think you said it right there, Kyle. I'm with Aerospace Insurance Managers. I'm the chief underwriting officer, vice president of the company. And I just came on this just to see what Kyle has to say. I've known him for darn close to 30 years in the business here. So yeah, just came to say hi and contribute as needed.
Thank you, Sean, and Tom, thanks for the call out there. So going on with, I thought I had coverage for that, removable equipment such as headsets. That also goes into a situation of if you have a claim. So if you have some nice avionics in there and the aircraft gets damaged, and you're going to turn in a claim, don't go in there with your screwdriver and start taking avionics out of the aircraft. If it's installed, it's part of the aircraft, and the insurance company is entitled to it in the event of totaling the aircraft out. Now, when it comes to removable equipment, that's a different story. Headsets or something that you have that can snap in, snap out, and you can take it with you and from like a panel mount situation for another aircraft. That's a different story. But look at your policy, see what you have for spare parts coverage, removable equipment, personal items, personal effects, baggage coverage, and things of that nature, to see what you have coverage for. Go ahead and read through your policy. If you have a question, ask your broker. That's what your broker is there for, to answer any questions that you might have. And if they don't have the answers, they're going to phone a friend, just like I did. They're going to reach out to the underwriter and say, hey, I want your take on this. So you can negotiate how much coverage you have for removable equipment. And you can also negotiate how much coverage you have for spare parts. We see a lot of this more often on the turbine aircraft side of things, where I'm going to go with the story, than we do on the piston, but it could still be relevant. And if you're using a piston airplane for your business, and say there's your engine, you need to have your engine overhauled, but you fly a lot, and so you want to rent another engine. Well, once you take your engine out of your aircraft and you send it off to be overhauled, or maybe they're on the airports being overhauled, and you put another engine on your airplane, the engine you took off is now a spare part. So do you have spare parts under your policy, and how much spare part coverage do you have? Premises owned versus rented. So for me, for example, I own my hangar, but I don't own the land that it's sitting on. So how is my policy structured if somebody slips and falls around my hangar? Is the policy set up correctly? I have, slip and fall coverage for it. So every aircraft policy is different on if you have premises liability. I mean, I did it this last week, and it was beautiful. Lit the grill, had some friends over that flew in and threw some burgers on the grill. Well, what if somebody got hurt? Or what if somebody gets on some mobile equipment that we have, and whether it's myself or somebody else, and they hit somebody or hit a car? Do you have on airport mobile equipment coverage? So there's a lot of little things in your policy that may or may not be there. And so it's just a good idea to read your policy and think about what your specific environment is, and do you have coverage for that, or is coverage available for that, and ask. Non-owned hangars and contents. Man, we've had some wild claims over the years. Say you got your John Deere tractor in your hangar, and that it's not your hangar and something happens and that thing starts a fire and now you've tore up the hangar that you don't own. Maybe it's a community hangar and now there's fire damage done to the other aircraft that's sitting in there. Look and see what your policy covers. Now, I'm not naive. I've seen a lot of these small airports out there. I'm one of them. I've got an old car in there and I've got a tractor in there next to my airplane. So look and see what your coverage is saying. Another one is strikes, riots, civil commotions. So we're coming up on the 45-minute mark. So I'm going to tell a story and then make sure nobody else has any questions for the next 15 minutes. And this is one of my favorite stories to tell that I thought I had coverage for that. So there was a banker, and this banker didn't do a lot of airplane loans. He was a community banker, but he did do a loan for a company that had a jet, and this jet flew from the Midwest down to Mexico. Actually, I think it was Venezuela years ago, somewhere south of the border. And they go down there, they're there for a couple of days. They go to come back, and the airplane had a mechanical issue. So now the airplane's grounded. So the passengers airline home. The pilots trying to figure out what they're going to do to get the aircraft fixed. They end up airlining home. They get a maintenance technician. They get the part that they need. They fly back down to this country a couple of weeks later, and they go to the airplane. They're going to fix the airplane, and they said, "Where'd our airplane go?" And the people at the airport said, "You do not have an airplane. El General has a new airplane." And El General had repainted the airplane. He had seized that jet and made it his own. So that's what we call war hull coverage. If a government seizes the airplane, and a lot of them does not say whether it's foreign or domestic, that's where the war hull coverage comes in. So strikes, riots, civil commotion, and government seizure. If you don't fly south of the border, you're not really worried about the government seizure. I can tell you this. I had a client about 15 years ago, and the U.S. government seized his $23 million jet. Insurance company was really nervous for a few weeks until that client pledged other collateral and got the airplane unseized. But also strikes, riots, and civil commotion. So if you're in an area where there's some protest, some strikes, riots, civil commotion, spills over into the airport and your airplane gets damaged and you don't have war hull coverage, there's a chance that the insurance company could deny coverage from that standpoint. How much is war hull? It's not much. It used to be, but the price of it has come down significantly. And a lot of lien holders, especially the major ones for aircraft loans, they require war hull coverage. So you can't get an aircraft loan without it. So with that, I'm right at about a quarter till. What questions do you guys have for me?
We had a question from chat that says, how does the insurance company know if the owner insured the value of the aircraft properly?
That's a great question. They don't. They are relying on you, the aircraft owner, to determine the value of it. And as we know, the values of it, there's a big window from highs and lows. And really, and I'll let Sean give his 2 cents here in a second, but it's my understanding a lot of the insurance companies, as long as the application comes in and they look at Blue Book or whatever their source is, as long as the desired insured value does not exceed 25% over the Blue Book value, or if it's not under 25% below the Blue Book value, it's that big window, they're going to be okay with it. That's what they're going to go off of. But if it's under that number or over that number, that 25% on either side, that's when the underwriter's going to start asking questions. Sean, do you have anything to add on that?
Yeah, I would agree wholeheartedly with what you said. There is a leap of faith that the underwriters are going to take when we do hull value, insured value on these things. It's just a matter of, we have to justify if it's out of whack, for me anyways, in my company and my underwriters, it doesn't mean, no, we can't do it for, what you feel it's worth. We just need justification of it. We need to understand why yours is greater or in some cases lower than what the average Blue Book is. And Blue Book is just one source. We use all kinds of different sources to come up with reasonable values.
So again, the excellent question, but the burden is on the insured.
And then the next question is, if I become
It-
too old and am unable to get full insurance, am I able to obtain liability coverage only?
Liability. Well, again, every carrier is going to be a little bit different on what they will and won't do. It's an excellent question, and it is a strategy that you could do. Sometimes, and it doesn't really help you if you're flying the aircraft, but sometimes we've had customers get ground only coverage to appease an airport authority that needs a certificate of insurance. But again, since every carrier is different, I can let Sean speak to his perspective for his company.
Yeah, from our perspective, the older I get, the younger my elders are. I like to say that. And so I do have a healthy, respect for we're not getting any younger. I will say that the number one indicator of a problem with a senior pilot is not necessarily the age, per se. It's actually their currency level. How many hours a year are they flying? Are they staying active in flying their aircraft? What type of aircraft are you flying? If you're flying a pressurized twin, that's a different story than it is for somebody who's flying a Piper Colt. As far as complexity goes, the older you get, the harder it becomes to maintain those limits that you might have. So there's different tools we could do to keep you flying. One of them is lowering the liability limits. Another one is, you're flying basic med. So we may say, go get a third class medical every year. We may say, you're flying a high performance aircraft. We want you to get an IPC in it because that's an instrument platform that you've got. There's lots of different things that we can do as underwriters to mitigate any concerns that we have. And, our goal is to keep you as a customer as long as we can. It is not a goal to say, okay, you're a higher risk now, we're done. But what we want to do is mitigate our risk. Some of that mitigation of our risk is also charging more as we get older. But it's those things that we can do, every day. It's fly as much as you can. Talk to your broker about that. Get ahead of that problem. Ask your broker, okay, what's going to happen when I turn 70? What's this company going to do? Oh, they'll be okay until you're 72. And you're thinking, wait a minute, I'm 69 right now. I still have other options. My health is good. I expect to fly for the next 5 to 10 years. So maybe you need to start looking at that from that perspective of where do you need to be at the end game? Because a carrier is less likely to pick you up at 75 years old as new business, as opposed to getting you at 69 and willing to stay with you until you're 80.
Yeah, all great comments, Sean. Thank you for that. Marcel, what other questions do we have?
So I have a little bit of story and then a question. I had a partnership in place with Cessna 340, and my partner ended up totaling the aircraft. And and it was settled, but then the insurance company refused to insure even me. So the broader question is, what about partnerships and insurance and liability issues one should keep in mind?
Well, I mean, that great question. Great question. Here's what I'd say. Moments before I got on this webinar to host, I read about there was a deal that popped up about the accident for the Lear 55 that was headed from Philadelphia, I believe, to Tijuana. That was a medevac flight. And there's a lawyer that's representing at least two of the families, I believe. And they are suing the operator of the aircraft. Looks like they're suing the designer, the manufacturer of the aircraft, and they're also looking at suing the people that are doing the maintenance on the aircraft. So if you are in a partnership on an aircraft, just be aware that who knows what's going to happen and what lawsuits are going to get filed. But the deceased party's estate could be suing the other partner saying, making whatever allegations. Well, Bill wanted to overhaul that engine, but partner Susie said, no, it's still got a couple hundred more hours on it. There was making a little bit of metal, but not a lot of metal. That's why we didn't overhaul it. And so they're going to say if the engine was overhauled, that the accident wouldn't have happened. That's where my mind was going on the initial part of your comment there about partnerships is to know that you're going to be around, somebody's going to be around to get sued. From a claim standpoint, I don't know all the details on that. That's kind of disappointing. And I'll give you an example of why. I had a customer in a P Baron a couple of years ago flying over the desert Southwest at like 21,000 feet, and the windshield blew out. I mean, sucked his headset off. I mean, it looked like a tornado went through the inside of that aircraft. And he was able to get it on the ground successfully. And he called me and says, Kyle, I was really wanting to transition to a jet, as you know. Am I going to be able to get insurance? I said, heck yeah, you're going to be able to get insurance. It's going to be easier for me to get you transitioned to insurance now with that story about how you had this massive decompression, kind of a structural failure of the aircraft, and we're able to keep your cool and get it on the ground. I mean, that's a heck of an emergency, a heck of a story to tell. And so we did. We got him transitioned to a citation. And from a premium standpoint, premium was good. And the underwriter just loved knowing that he has a client that had a situation that was handled so well to transition to the airplane. So a little bit of a different story. Don't know all your details. Happy to, again, to talk to you about that offline, because again, every situation is different. But if you have a story to tell to justify your situation, it goes a long way with the underwriters.
Like to second that, VJ. If you've got an unusual situation, the initial reaction to an underwriter may be no. But if you have an advocate on your side with your broker that can explain the situation, and show why it's not going to happen again is the key. So make sure knowing that you have an advocate in your broker is so important.
Yeah. No, the weird part on this was since my partner totaled it, I went back a year later only for me. And I somehow seem to have been tainted with that insurance company, even though it had nothing to do with me, which was the part which was surprising to me.
Yeah, that is surprising because I mean, I think of another situation that we had where the jet was totaled. The pilot ran off the end of the runway, totaled the jet. The owner fired the pilot and hired a new pilot. And again, that was a story that we had to tell the insurance company. Here's this, we're not talking about the same pilot. It is the same owner, but it's going to be a different situation, and had the story to tell. I had another customer that had a Cirrus. Was not his fault. The video shows the the ground crew towing this airplane closer rotation speed behind this tug, and ran it into a fuel truck and tore it up pretty good and totaled it. And again, told the story about what happened. The insurance company paid and subrogated against the FBO. So, got to be able to tell that story. That your situation is disappointing, but I don't know all the details.
All right, thanks.
What are the questions we have?
What percentage in premium increase that he can expect after age 70?
Again, that's every carrier is going to be different. For some people, it's not going to be any. For some, they may have a rule of thumb of 5-10%. That is a very hard question. I can't answer that because it's going to be different for every carrier.
And we
Sean?
did have a question from Instagram about insuring smaller private planes and private jet fleets, to which he said, I told him it was nuanced and to contact you directly.
Okay. Yep. That's the thing. When you're talking about fleets of aircraft, it's totally different. So I may have a customer come to me and say, hey, I have my aircraft being managed by a flight school or a charter operator or a charter management company. And they say, but we're thinking about starting our own flight department or whatever the case may be. Can I get my own standalone policy? And I try to manage your expectations. Look, the people that you were working with, they're buying in bulk, so to speak. And now we're going to go buy our own policy. Odds are it's going to be a little bit more. We do have some customers that say, no, I want to have my own standalone policy. I want to name the management company as an additional insured for the contract I have with them. and I put them with the same insurance carrier, but they're going to pay about a 10% surcharge for having their own standalone policy. Being every carrier is different and every situation is different. And also, quite honestly, you talk about liability limits. Same is true for the liability limits. I mean, I have some collegiate flight schools that operate an aircraft. They have $10 million of liability coverage, and we got student pilots flying these things. But they have such a tight box around this. Been with their insurance company for so long that I can get them a 10 million limit for what it would cost somebody else to get $1 million coverage, or if it's a student pilot that might not even be able to get their own policy. What other questions?
There are no more questions from social media, and I don't see any further in the comments.
Well, this has been great. I appreciate you, Tom and Marcella, for having me talk about airplane insurance. It's not the most sexy thing to talk about, but hey, it's aviation, so that makes it pretty. And I always enjoy educating, and even if I can't answer the questions, provoke some interesting questions and good thoughts. So glad everybody's thinking about risk management and how to protect themselves.
I want to personally thank all of you that took the time to get on here personally. Many of you I've known for quite a while. Some of you are new friends of mine, but I look forward to working for you in the California sales tax arena. So I guess that's it, Marcella.
Sounds
Thanks,
good.
Kyle. Thanks, Sean.
Yep. Thanks, Sean. Appreciate you piping in. Thank you, everybody, for
Hey.
joining.
Anytime. Have a great day.
Thank you.
See ya.
It's our plan to